Hey Shane, how's it going?
Told you to stop asking me that. I'm too busy. Man, it's been a long December already. I think that's a Counting Crows song. Anyway, it's been a long one. I'm ready for it to be over. We're very busy in the offices at Elevate, but still want to make time for these chats because they're fun and hopefully people out there are getting something out of them. We were talking about it before. We're getting some viewership going on. I don't know, more than I expected. So pretty cool. And I'm enjoying it. So this is a fun break in the week.
It is. And for anyone new, love to have you subscribe if you do like the content or if you want to throw some comments in. We can cover whatever you'd like, but we just enjoy talking about markets, how to navigate those and kind of manage a portfolio. Not advice here, but just hopefully enjoyable content for everybody. So, but today's December 15th and markets are a little ugly. It's been a rough week. So why don't we start off? This is the newest member to the family here. So this is
That's
Ruby. She is 9 weeks here. She's a mini Aussie, and hopefully I'll have her picking stocks here soon if I feel like I've lost my edge. But
we got you. Is that like I know dogs love my dog loves to chew on antlers. Is that an antler that you landed on your own or like found when you're out? I know you go out looking for antlers every I don't know, when do you do that? In the spring?
in the spring, my wife actually found that in the backyard, and I would love this dog to pick him up while we're out hiking around. So trying to get her to enjoy chewing on one. I know they say they're really healthy for him, so we'll see. Right now, she just loves my slippers and any other shoe.
You got a saw or something? Because I know they my dog likes them more when they're split and he can get to the inside of it.
Interesting. I might have to try
Yeah,
that.
split antlers is the way to go. You can buy them. They're not cheap either. But
No, they're not.
yeah, try and split it. See, then they'll really like to chew on it. Anyway, that's not what we're here to talk about. It's a cute puppy though.
It is. So why don't we get into it? So just to, refresh anyone that didn't know, we had the FOMC yesterday and then we had CPI the day before. So a lot to talk about, but let's just start with what we've kind of gone through before, and that's what Powell has said in the past, and then we can kind of update what was said yesterday.
Yeah, so this was only 2 weeks ago. This was November 30th when he gave a speech at the Brookings Institute. We talked about it in the past couple of calls. So this is 2 weeks from yesterday, and nothing changed in the 2 weeks between November 30th and yesterday. They got the CPI print for November, which came in again above 7%. So inflation's still extremely high. Core inflation's still at 6%. Um, there's just really nothing that's changed. And Powell's been abundantly clear since his speech in Jackson Hole back in August that they're committed to bringing inflation down to 2%, and we're nowhere near 2%. So every single one of these 16 points that he made 2 weeks ago is hawkish, inclined to raise rates, which is bearish for stocks, which means stocks are likely to go down. And nothing changed. So I am not surprised. In fact, I posted on Twitter this slide. I don't know if it was yesterday before the meeting or the day before on Tuesday, but I pretty much said like anybody expect Powell to say anything different than what he said 2 weeks ago? And the answer is no. I mean, I didn't expect him to say anything different, and turns out he didn't. Yet you get all these people, and we've picked on these people before, these people who are just begging for the Fed to pivot to cutting interest rates, which of course would do nothing but re-accelerate inflation and make things harder for the poorest people in our economy because inflation disproportionately hits the poorest people with the least amount of disposable income, people who got to buy food, they got to buy gas, they got to pay rent, pay their mortgage, whatever it might be. Those things disproportionately, make up a larger portion of everybody's of the lower incomes monthly spending. So, you know, Jeff Bezos and Elon Musk aren't really worried about the cost of eggs. It's
No,
not gonna change anything for them. But there's a lot of us out there who are paying very close attention. And hey, I saw gas at $2.99 in Florida yesterday. That's what I paid to fill up my tank. So um, because we blamed Joe Biden for high gas prices, do we get to thank him for those low gas prices? I don't know. I don't think so. I don't think that's how it works, guys. Politicians have nothing to do with the price of gas.
Yep.
or very little, if any. So anyway, this is the lens through which to view the markets. It's through the Fed's lens, and the Fed is hawkish. They're going to keep raising rates until they bring inflation down. Inflation is a proxy for prices, so they want prices to come down, and that means the prices of everything, including stocks and bonds. So there's just no reason to be aggressively long stocks or bonds in this environment. It's going to be volatile, and I increasingly think that the market's going to be down again next year because they're they're not backing off, and inflation's not coming down fast enough. So
Yeah. And we're sitting here, we'll get it to the charts, but at a key inflection point right into the holiday season when there's light volumes, and you can see some pretty drastic moves on that. So we'll see what happens. But Shane, you brought this up yesterday, and this, I'll let you address this one, but I mean, it hits the nail on the head.
well, if you just look at, I mean, we don't have to read all the words. If you want to pause it and read all the words on this slide, feel free, or go connect with me on LinkedIn because I posted it up there earlier this morning. But at any rate, just read the yellow. So this guy, Neil Irwin from Axios, says, "What's your view of the likelihood of any kind of rate cuts next year?" And Powell says, "Our focus right now is not on rate cuts." I don't know how to be more clear. How could you be more clear? This is quite clear. Like there's no rate cut coming. That's what a pivot means. There's no pivot. There's no pivot coming to cutting interest rates. The Fed put is not in play. It's just not going to happen. And I have some slides updating our projections on when they'll finally back off. I still think that the Fed will hike in February and in March of 2023, and then I think maybe they will pause after that, depending on how inflation is behaving. I think that's the earliest point really that we could expect them to pause, and then the real Fed funds rate would go positive right around May if that were the case. But unfortunately, in that projection, CPI flatlines at 4%, not 2%, which means the Fed would probably need to resume hiking rates before they switched to cutting rates. And that's just the economic reality. I'm not trying to be a bear for no reason. I'm just looking at this is arithmetic, right? It's math. It's not a narrative. It's not a gut feeling. It's not a hope. It's not a prayer. It's just basic economics and arithmetic, So everybody needs to kind of set their feelings aside and stop begging and hoping for the Fed to cut rates to bail them out of their bad positioning. You just need to look at what's really on the table, and what that is continued hikes and continued hawkishness, and not even I don't think there was a single question in the whole press conference about the balance sheet reduction. So even if they pause rate hikes, they're still going to be letting assets roll off the balance sheet, which is hawkish and moves rates higher without actually hiking the Fed funds rate. So I don't know, man. Increasingly, I'm concerned that we might not even see a recovery year next year. Could be a big, long, deep recession next year, with the market languishing and heading lower once more. I mean, it's a very realistic possibility, and I don't think enough people are talking about it.
I agree. So with that, what do you do? I think this is one of the most helpful tools I know of. So this is on barchart.com, and what this is that every sector in the S&P 500 across the top, you have every key moving average and the percentage of stocks above those. So when I look at this, the highlights here is healthcare, industrials, materials, and then utilities. They're sitting here on the 50-day moving average, 80% roughly. You got 90% here or all above that. I want to be looking at those sectors if I want to buy something. I don't want to go pick the dogs of the sector. I'll let those work out on their own, but notice those sectors. So healthcare, industrials, materials, you're not seeing the tech leadership and the names of yesterday. You're starting to see some, emerging leaders in other areas. So there's always stuff to buy out there, but important to be with the trend and be with the momentum, not trying to go, pick the cheapest thing around because it can go to zero.
Yeah. In a back test, based on, our framework that we got from the guys over at Hedgeye, They would say that in an environment where inflation is declining and GDP is slowing, which is where I think we are and probably likely to stay for the better part of next year. Consumer staples and healthcare are the best performing equity sectors. So consumer staples you don't have highlighted. It's the third one on the list, but it does have 58% above the 200-day moving average, one of the higher rates, and then also 76% above the 50-day moving average. So I think staples and healthcare are the two sectors that I'm most interested in looking for longs right now. Energy is another wild card. Just because I think we may not have a Fed put on the overall market, but we kind of have a White House put on energy because they have so depleted our strategic reserves. And they've come out and said they were going to buy oil back, right around $70. I think the range was like 72 to 68 or something like that. And so if the government's going to be buying oil in that range, I think it's pretty unlikely that the price of oil will drop materially below that range, and that will keep the energy producers doing well. So those are the sectors I'd keep my eye on.
Yeah, and I thought I'd highlight one with utilities. I thought it was interesting. Usually when rates rise, utilities get hit pretty hard, and right now they're doing pretty well, but I've also noticed the 10-year treasury, the rate on those is going down a bit. So maybe there's a correlation there, but I definitely, these three, those are names I'm familiar with or sectors, and I might go looking in there if I wanted to go buy something.
Yeah, definitely interesting that the longer end of the curve continues to kind of drop while the short end of the curve kind of holds up and maybe even goes higher, which is why the yield curve, the spread on the 2-year treasury minus the 10-year treasury rate is such a big negative number, which is a very good sign of a impending recession.
Mm-hmm. So, with that, let's just go ahead and check out the S&P 500. So we got the SPX up here. We've highlighted this. I mean, this line just keeps getting tagged, fails, and I've talked about this before, but usually it's when nobody expects it, where you get everybody on the wrong side of the trade where it makes that move, and doesn't quite show it here. You guys see that overnight action, but we popped up into this area and just totally rejected it on that CPI print, and there was, I think it was the highest put buying going into that, so some big money was really prepping. But once that worked itself out and you had that huge wick, we're seeing this now, and this to me looks pretty dang ugly. I think today needs to close down, 30 more points or so to confirm it, but this is not what you want to see for a buying opportunity. What are you seeing, Shane?
I just see what's very obvious every time we get to a lower high and then the momentum rolls over to negative, we drop. There's nothing that's changed since January. The Fed is hawkish, rates are going up, liquidity's coming out of the market. I don't know what else to say. This is a pretty chart, and it just works out great. That market tried to run higher, tried to gap above the 200-day moving average on, again, hopes that the Fed would pivot to cutting rates. And CPI at 7.1% versus 7.7. Who cares? What's it? It's 7. It starts with a 7. It needs to start with a 2. We haven't even dropped by 2% from the high CPI plan, let alone get to 2% overall.
Yeah.
Like this is, I don't know. The market tries to do pain or deliver pain to people who, get too short ahead of a print or, so you get some people getting faked out on the long side when the market went above the 200-day moving average for the first time since April. And they're like, oh, gotta buy. We're above the 200-day moving average. Gotta buy. And it's like, it doesn't work that way, man. I mean, above the 200-day moving average is an important line in the sand, but things often fake out instead of breakout. And we just saw a double top fake out right here. I mean, that's what I didn't draw the line at 4,100 because I just want to keep this chart clean, but that's a double top right above the 200-day moving average. So we tried twice and failed to hold above the 200-day moving average. And now we're making a fresh low for the month, basically. 50-day moving average might act as some support here, but economically, fundamentally, there's no reason for the market to go materially higher. I would be more likely to bet on a new low below 3,500 before we see another break above the 200-day moving average. That doesn't mean that'll happen. I expect a fresh low. I don't see why we wouldn't see a new low because the Fed is still hiking rates. Inflation is still incredibly high. A lot of people in the economy are hurting. I think holiday sales are going to come in weaker than expected when it's all said and done. Um, even if people spend, more money, they're going to get less stuff. We all know how that works, right? Like, so
Right.
fewer units are moving through the economy. Supply chains are disrupted. We'll see what happens if China actually reopens things. What that does to overall inflation, because demand will increase across the globe. There's a lot of things that go into it, but this chart is super, super bearish and super clean, it doesn't get much easier than this.
Yeah. And, a couple key points for the novice investor. Look at this. First time you hit that line, took 1 day to resolve. Second time took about 4 days. Third time it becomes so obvious that everybody does it. Oh, I'm going to short here. And they get blown out, frustrated. So they try it again, or they try to get in there again, thinking, okay, well, it's going to break now, or I'm going to short it. And the market really tries to wear those, holders out. And now you're seeing that break, and now you've got that year-end lack of liquidity in the market. So we'll see what happens, but you could see an exacerbated move down, but it could just move sideways too. You never know. But
S&P 500 is down 2.62% for the day right now as we're talking. The Nasdaq is down 3.3% for the day. I mean, come on. What else do you need to know? We just got through our they got what they wanted. CPI came in lower than expected, right? So it was better than expectations. And then we had the Fed say they're going to or actually reduce the pace of hikes. So they didn't hike by 75 basis points, they hiked by 50, which is what we've been projecting for months. So no surprise to us.
yep.
So the market got exactly what it wanted and we're selling off hard.
Mm-hmm.
That is not a good situation to be going long stocks.
Nope. And you always got to wonder, it's that catalyst. We had CPI and the FOMC were huge catalysts, and those catalysts gave us this.
And
So
what's the next catalyst on the list? I mean, what is there? There isn't even anything coming. The next Fed
there's
meeting isn't until the end of January, first day of February. And yeah, we'll get CPI again, early in January, but increasingly we know CPI is coming down. It's going to gradually drop. Any surprises to the upside, you look out. But CPI is probably going to just continue to slowly come down due to base effects. So if anything other than that happens, I'll be totally shocked.
mhm.
But there's no other real catalyst.
You forgot one. You got so
Santa Claus?
with
Santa Claus
Christmas,
is coming to town?
if you mailed your letter to the right address and it got to the North Pole, you got a shot. But
Yep.
that's
Santa
about
Claus is coming to town.
it. And then so right here again, so this is the SPY, which is just the ETF of the same thing, but same rejected there, coming down.
Yep.
And
Breaking
then
the levels, that's just looking ugly.
yeah, and we talked about this one last time that, relatively speaking, the Nasdaq just couldn't get enough steam even to come up here while the S&P was going up. And this looked like the dog, and no surprise here, we're below the 50 right now is when you screenshotted this today.
Oh
I'm
yeah, and
guessing
we've
it's
moved
below
lower
it.
since. Yeah, we moved a little lower since. So yeah, this is ugly. I mean, the Qs hasn't gotten above the 200-day moving average since late March. Hasn't really gotten close to it since then. And I partly think that the reason the SPY, or the S&P 500, made that double top was because the Qs needed to play a little catching up so that it could drop harder, right? It needed to get a little closer to that 200-day moving average before rolling over. And so, you got Apple in here, all the big tech companies, Google, Microsoft. So this actually Apple and Microsoft, last time I checked, made up I don't even remember what the percentage. It was like 15-20% of the Qs.
Mhm.
It's crazy how big of a percent it was.
And
So, oh,
with that, if you want to turn over here, we have the Apple chart. If you want to talk to this one, Shane, highlighted a very key line.
Yeah, how many circles is I didn't count them. We got 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're at the
Yeah.
10th test of the 138 level, going all the way back into 2021. So it was resistance all the way until it broke out above, and now it's been support, all through 2022. And we'll see what happens this time around. But if we break down below this, next stop 129. If 129 doesn't hold, look out below, man. I don't know. If I could buy Apple for $100 a share, and that gap, by the way, that you see way down there, goes down to like $80 a share. I mean, that takes you back to buying Apple at COVID prices, I'm pretty sure. And I will definitely be buying stocks, buying some Apple down there if we get there. Um, that's a long way from here, don't get me wrong, but Apple's not down as much as anything else, and Apple represents a massive chunk of the Qs, the Nasdaq index, and the S&P 500 index. So if this thing finally dies, and the hedge funds and retail holders and mutual funds all start finally looking for liquidity and looking for cash by selling their Apple. So if Apple becomes a source of funds, right? Hey, I need cash to pay this. I need cash to pay that. Well, Apple's still up. I might as well sell some. Look out, man, because this could take the whole market down another 10, 20, 30%. Just I know that sounds crazy, but I'm not kidding. I'm not exaggerating, and I'm not trying to be hyperbolic. Like this one stock could take the market down 10, 15% all by itself.
Yep. And still, hey, it's a great name, like we've talked about, but it doesn't mean that it has to stay here. It could go to 100, no problem, and maybe that's a good time to get in, but got to manage risk. And
Yeah, we depend on pricing inefficiencies in order to make money in stocks. Like if there was never a price inefficiency to exploit, we could all just buy the index and go home. But
mhm,
the truth is that active management works because analysis works, both technical and fundamental, and you can identify good times to buy things. If you can identify good times to buy things, but you can't identify good times to sell things, you're a mistake. You have a problem. Then that means you can't identify good times to buy either, because you can't have one without the other. If you know when it's a good time to buy, you have to know when it's a good time to sell. That doesn't mean you're going to get it right every time. But you have to be looking at it that way. Like there is a time to sell everything, even the darlings like Tesla. Look at this turd.
yeah, and this is one, it was every headline, people I knew talking about, how much money they made on the way up. They were going to hold it forever because, it's Tesla. They're the big innovators, and this chart couldn't be uglier. I
No.
don't know where we're going to end up, but I think we've given back half of that, monumental move that it had. But
Oh yeah, this thing's terrible. I mean, it's down 62% from highs in November of 2021. It's down literally 62% to today. Musk continues to sell shares. There is an article in the Wall Street Journal this morning. He sold another $3.5 billion worth of the stock last week because he's got to pay for his Twitter issues. So Elon's selling. He's been selling, and the market still doesn't get it. I mean, he's not a dummy. I'm not a big fan of Elon Musk. If anything, I like him more now for trying to defend free speech to whatever extent possible on Twitter. But he's also he's also lied about his company for a long time. So I don't think you can necessarily take him at his word that he's defending free speech on Twitter, because I think that he will defend free speech that he agrees with, but not free speech that he doesn't agree with necessarily. And so I'm not a fanboy of Mr. Musk at all, and I think Tesla's. I think they've reported a ton of fraudulent stuff. I think they've done a ton of fraudulent stuff. I think Elon has been at the center of that controversy since day one. And I have bets with people. I probably said it on this call before, but I have bets with people that he will be in prison before I die. So I had to write into my will that one of my buddies gets a beer if I die before Elon Musk goes to jail. But I think he's going to prison eventually. Sam Bankman-Fried just got locked up the other day, right? Because he was a fraud, a straight up fraud. I mean, these guys all look like they're geniuses until they end up in jail. Same with Bernie Madoff. I mean, you couldn't give him your money fast enough because he was so good and had such good returns all the time, and everything was always perfect. And then boom, one day it's all gone and he's in jail.
Yeah.
So wouldn't surprise
And
me if that's where Mr. Musk ends up.
yeah, and on this one, aside from that, is just when I look at this chart, every rally I see from here looks like a great shorting opportunity. And you got to keep one thing in mind. If he sold $3 billion worth of shares, who's going to come back in with that kind of size to push it back up?
Yeah, that's why he was advocating for the company to do a $10 billion buyback.
Hmm.
Shocker. Why would they need to do a $10 billion buyback? Because he's trying to sell $10 billion worth of stock. Somebody's got to buy it. That like it's I mean, that's not fraudulent. That's just dirty. That's a dirty trick. Um, I don't think they approved it. I don't know if Tesla's actively buying back stocks, but I, I don't know. It's all obnoxious to me. Whatever. I had
Yeah,
something else to say, but I forgot what it was.
all good. Well, going from green energy to oil here, this is
Oh,
one.
sorry, I remember what I was going to say. Go back to that Tesla chart. Um, it's not really a charting thing, but here's the deal is the better Tesla gets at producing vehicles and selling vehicles and earning profits from producing and selling vehicles, the more likely the market is to value them like an automaker and not a tech story. And I'm here to tell you that automakers get about a 2% profit margin. And they don't get a very big multiple on that margin. Go look at the value of Ford or GM or Toyota or Volkswagen or any of the big automakers. They earn a very small, very thin margin, and the market does not pay a very big multiple for it.
Oh,
Tesla earns like a 15% margin. I mean, if you believe their accounting, and they get a ridiculous multiple, hundreds of times their earnings, right? As Tesla becomes a car manufacturer and profits from like so what I'm trying to say is that success for them represents a substantial price drop in the shares. So
yeah,
the better they do at their operating business, the worse it's going to be for their stock. So like their business is mostly selling stock and selling a story. That's what their business has been up till now. And the more it becomes producing and selling vehicles, the lower this share price is probably going to go all by
yeah.
itself.
And look at this too. Stocks are forward looking. So here is this huge valuation. Now they are trying to justify that with the fundamentals. So that's becoming the leading car company.
Yeah.
So yeah, it's all kind of wind out of the sails. This is not a stock to own right now. Good short spot, but
Yep.
uh, so next thing, just looking at oil here. This chart had a nice little rally the last few days, but I've kind of given up on what the fundamentals are here. I don't know. I know a recession certainly doesn't help the price of oil, but I'm waiting for it to be a little more constructive right now.
Yeah, this thing is in a downtrend below the 50, below the 200, just rallied right into resistance. Momentum did just turn positive for the
It
first time
did.
in a little bit. So if it can rip through this resistance and keep its positive momentum, certainly it could go back to the 50-day area or that 85 area. And then just like Apple, we've got this 93.50 area that's it's been both support and resistance going back to March. So that's you know lots of overhead resistance. I don't see how oil could get through say 95, right? You got the 200-day moving average acting like resistance there, now pointing down. Seems like this is dead money on the long side for a while.
It is.
Doesn't mean it
And
has to crash, by the way. It just means it's kind of dead money on the long side.
yeah. And Shane, this has been the scariest chart every time we get to it, but it's the inversion of the yield curve. And it looks like we got just a little bit of a break from last week. So just
Yep.
this
Ticked a
tiny
little
little blip.
higher.
Yeah.
Ticked a little bit higher, but still extremely inverted, which to me signals a deep recession.
Yeah. And not much more to say on that. And I agree. You look back, we have not been at these levels in a number of years, and we've had recessions. How bad is this one going to be? Who's to say? But look where '08 went, '99. Um, this is definitely a level we haven't seen in a while.
Yeah, I can tell you, most people who are managing money today were not managing money the last time the yield curve was that inverted,
No.
myself included. I don't think I was even born yet, to be honest.
So then here's copper. We brought this one up last time. I thought it was looking a little bullish. We were still waiting for it to clear the 200 day, and it looks as right now it still is guilty until proven innocent. So
Yep. it's guilty. That then the momentum ticked lower. I would expect us to go uh back to the low end of this range near that purple line. So that's
Yep, I
just an update. I don't have any thoughts. Just figured I'd throw it in.
that's good. Now this is
Oh,
the thing.
Q's just broke the lows for the day. So we are now down 3.51% for the day.
Yeah, that's a big number. I'm watching S&P's got 2 points to go before it hits a new low. So we
Yep,
might
it's
see that
working on
here.
it. About to drop. Bottom's about to drop out.
Yeah. And but here's the one nobody's talking about this, and it's kind of funny. I don't know why it doesn't get more attention, but the balance sheet runoff of the Fed, I'd almost say I haven't done the math, but I think that could be worse than just hiking rates. I mean, it's a doubling of that.
And we don't even have any like historical precedent for it. Like they rolled balance sheet, or they rolled the balance sheet once in 2018, the last time we had a negative year in the stock market. But that was a short-lived quantitative tightening, and so it's just the sample size is very small. Every time we've ever done it, the market has dropped, but that's only one time. And so I just don't. I don't see how this could ever be bullish for stocks. The whole reason that they add to the balance sheet was to make the stock market go up. So the opposite should do the inverse. And
Yep.
so the further they go with this, the lower stocks ought to go. It won't be a one-to-one relationship, you know. It's like I think we've talked about before. It's like a guy, Kyle walking his new puppy. All right, they're connected by a leash, and they're starting from the same place and ending up at the same place, but the path they take to get there is very different. The little puppy is darting all over the place, here, there, and everywhere else. That would be like the stock market. And Kyle's walking, at a steady pace in a straight line from point A to point B, and that would be the economy. So the economy and the stock market are not directly related, but they are related, and you can't escape that. So yeah, we don't need to spend much time on this. I haven't updated it for December, so I don't know how much they've rolled off so far in the first half of December. I'll check that out for next week. But I assume that they're still working on it because Powell said yesterday that they were. So
Yep.
the next chart is just another look at the projections. So the forecast for the balance sheet is to go lower, and as that forecast goes lower on the Fed balance sheet, your expectation for the stock market has to also go lower. And I know that sounds crazy. I know people don't want to believe that the stock market could be down again next year. But like I said at the beginning of this call, the less people talk about it and the less people price that into their probabilities, the more likely I think it is to happen. So look out for another down year in the market next year potentially.
Yep. And this one, I just pulled this out of the Wall Street Journal, but big thing here is retail sales. They're falling, but the biggest thing is down here where it notes they spent more on everyday staples such as food, healthcare, and restaurants. So those aren't great things. If you want to talk tech, discretionary stocks, all that, not looking so good when you're seeing the consumer wallet. They're seeing inflation and they just want to get the basics because
Hey,
that's really all they can afford.
I didn't see this slide before we started. So which sectors did I say you might want to be long in this environment?
Consumer staples, that's a big one. Healthcare.
Staples and healthcare. There you go. Where did they spend more money? What do you want to potentially be long in this environment? That is not a coincidence. I mean, it is a coincidence that the slide's in here because I didn't know that when I said that earlier. But those things are related. I mean, that's why these are the sectors you want to buy because people aren't going to stop spending on healthcare. In fact, they might spend incrementally more on healthcare because of the COVID hangover, where people were, deciding not to go to the hospital and not to get certain surgeries and not to get other things done that they needed to get done because everybody was terrified of going into a hospital for fear of getting a little cold. And now people have realized, I think mostly that, yes, I'll be a little political here, that they were lied to by their governments and by the media, and that it wasn't really that big of a deal to worry about anyway. And so now the hospitals are open again, and people are back to getting the healthcare that they probably needed the whole time. So, yeah, healthcare, staples. I don't know that I'd want to buy restaurants in this environment, but
Yeah.
I'll take that back. McDonald's has been one of our best performers of the year. Recently hit a new all-time high. So McDonald's has actually been fantastic. I haven't really looked at any of the other fast food joints. Starbucks is another one that we bought recently that's done pretty well since we got back into it. It's up pretty nicely off of its lows. So I guess maybe I shouldn't say that. I guess we are in some restaurants and there, yeah, geez, Starbucks is from its lows. Wow. I guess I haven't measured this, but since it's low in May, Starbucks is up 45%.
Yeah.
We did
And
not buy it in May. I think we bought it probably in July, so we probably bought it around $77 maybe. And now it's at about 100, so not bad.
yeah, and I think a big one there, Shane, is when you talk, restaurants or just kind of food in general, is what end of the consumer market are they in? So
Yeah.
McDonald's, I can go buy food there for cheaper than I can make it. So if I'm on hard times, hey, I'll go there.
They still have a dollar menu over there? I don't know. That
I
used to
don't,
be a thing, remember? Dollar menu?
yeah, I don't know if that's still going. Costco still has the dollar hot dog.
Yeah,
So
$1.50. Yeah.
yeah,
You know what? I remember when I moved up to the mountains for the first time, there was no dollar menu in the mountains. Like at McDonald's in Denver or at McDonald's in Ohio or Wendy's in Ohio, there's a dollar menu. When you go up to the mountains, you're in Eagle or Beaver Creek or Vail or something like that. It is not the dollar. They still have a value menu, but it ain't no dollar.
yeah.
And I guess that was like a decade ago. So I bet you there's no dollar menus anymore. I don't know though. I haven't gotten food through a window in a pretty long time. I still stop at Dairy Queen every now and then for a blizzard, but
Yeah.
I try not to eat too much fast food, man.
Yeah, and I just thought I had one more thing, but if my wife's any indicator, does not work in finance, has brought up again, hey, maybe we should get a little extra of the consumer staples we need because with inflation, let's stock up now.
Yep.
And those are conversations. I mean, that is the impact of inflation, is that it front loads expenses and people go spend it on consumer staples, which in turn, helps the stock, but it also pushes up inflation. So I have a feeling those are conversations that other, households are having, and it's just the downside of inflation.
Yep.
So, well, with all that, here's Elon again. So we're talking about him a lot today, but yeah, just on the backs of his Twitter, kind of going in and find out, who the good and bad people were essentially, or accounts. We thought this was funny, but
And there we go. We're ending the call on a fresh lows for the S&P 500 and the Nasdaq. S&P is now down 2.88% for the day. Oh, and I'm getting alerts all over the place. Yikes.
yep,
Time to go
new
short
lows.
some stuff. Hope you're on the nice list. I don't know if you care about Elon's list, but hopefully you're on Santa's nice list this year.
Yep. And coal might be a little expensive this year, so
Yeah,
stock up now if you want to give that as a gift. But
there you go.
all right, well, Shane, thanks for your time again. I will see you next week, and yeah, we'll see where we're at. But I think my vote's lower. We'll see who's right in the end. But I think we both are kind of leaning that way.
Yeah, stay bearish. I don't know if anybody's bearish enough. So, all right. Thanks, Kyle. See you next
Yep.
time, man.
Have a good one.
Later.